What's up, everybody? This is Philip at Trade Genius. We're going to take a look at the Bitcoin data in this episode, and we're going to look at how we are faring against the S&P 500 since that's been our correlated market. As such, we'll dive into the technicals briefly on the S&P 500 to kind of give us a tempo of what's going to be ahead for the week. And then we're going to dive into the Delta, the futures Delta chart and look at the levels that are in play there and talk about this gap here on the S&P 500 and discuss halving coming up. So without further ado, let's dive into this video.
Trade Genius.
Real briefly, guys, we have our May specials running. So again, $3.99 gets you into the room, gets you access to our profit ribbon system, and that's going to be a series of educational videos to show you how to use it, and also chat room access. So just that's the $3.99. That's 12 months, guys. So very affordable, and get some free education along with that. So get you in the room with us. You can ask us questions, and so look forward to seeing you in there if you decide to check that out. All right, so let's dive into the charts. Okay, so the 30-minute Bitcoin chart, essentially this blue line, what we're doing is tracking the S&P 500. That's this blue line here. And there was some glimmer of hope that we possibly might be breaking away from the correlation. And what that stemmed from was on Friday, the market was down intraday, the S&P 500, and Bitcoin started to move up, topping out here north of 9K. And it looked like a legit breakaway from that. Then it pulled back, and then the future markets closed for the S&P 500, and this straight line just means that the U.S. markets were closed until the futures markets reopen in the evening. Now, during that time, Bitcoin drifted higher, made a new high, peaked out at 9,207, and then promptly pulled back from those levels. Now, when the futures opened, Bitcoin immediately sold back down and caught down to the SPX or S&P 500 futures, if you will. And then as we started to head into the US Open, both markets went up together. So the correlation for me is still there. There's no decoupling as of yet. So being that that's the case, we have to kind of take a look at what the bigger picture is for the S&P 500. And what we've done, we came up to the 618 level, 2934, 2935 area, and then that was promptly sold. And now we've pulled back down into this old area of balance. Remember this area here? So many days in this zone, and we're right back to it. So the question is, does this start the next leg down, or do they play some games, maybe try and attempt again up here? You might get a double top failure and then roll over. The longer the S&P 500 goes sideways to up, it's better for Bitcoin because Bitcoin tends to make gains against the S&P 500. So even though the S&P 500 might stay relatively flat in this zone, Bitcoin will trade a bit higher. Now, if the S&P 500 dumps and rolls over from these levels, and really what would be key here is taking out this low here at 27.25. You start getting a close below that, watch out below. And Bitcoin's going to go right along with it. So as much as you want to believe that the move up into halving was more along the lines of what we come to expect, because of the way things have been tethered between these two markets since the top in February, this has been more a function of going up with the broader U.S. stock market versus a halving bull run. Now, we probably saw a little bit of help from the pre-halving bullish sentiment that usually comes into play because the Bitcoin has actually outperformed S&P 500 in this move up. But make no mistake, if the S&P 500 rolls over, it's going to go with it. So again, on the S&P 500, key level here is this 27 area. We take and we close below that, then I think you have to be very, very careful on the downside risk there. Now, as far as the delta goes, we had a nice delta signal for long, so buy the pullbacks to the moving averages. First one you buy is the WMA 20 and then the WMA 65. And the 65 just had a bounce. Now, as far as where we are right now, you'll notice the colors are flashing back and forth. So that is signaling indecision as far as the futures deltas go. Also, you want to bear in mind the last time, because again, delta in this zone right now is not getting very far over zero. In fact, it's spending most of its time under zero. So bear in mind, when we start getting these upper readings, we're actually stretching the upper end of the delta range. So when we got up here last time, was back in this last local top, and then that kind of rolled over. Didn't dump, but it rolled over. So just keep in mind that this area might be a short-term top here, and potentially we could see the signal lock in. I wait for 3 4-hour bars to tell us that we should be looking for a direction on the next bar. And the next bar color changes, then we're essentially kind of chopping. So we're waiting for that. Right now, no play as far as this goes, kind of an area of drift as far as how we play this. But again, if we start locking in these pinkish shaded bars, then the risk will be getting below the WMA 65. That's what we're going to key in on. And then we'll be watching the delta if it goes down. Going to be doing these video updates this week, so we'll kind of follow along on these morning updates. Okay, so as far as what is our downside target, now, again, I've highlighted these levels. These are weekly price block levels. And as you can see, we're right in between these two. This upper area is a larger one with, you would kind of shoot for the midpoint in here, about 9,800. But again, 10 grand is that round number. I think a lot of people are shooting for that. But we may, I think we're not going to come up there and neatly tag it. I think we're either going to fall short or we'll have an overthrow over it, like one of those candle wicks that spike up above it. I think that's your only two scenarios. If we do get and press into this area and we start approaching 9,500, I think that you'll get within a couple $100, or you're going to go over it by a couple $100. But for now, I think we might see some chop in between these two levels. But again, if the market, all things being equal, if the S&P 500 rolls over, then I think all this turns into short mode, and we got to start looking at price points below for support. Speaking of which, the CME gap chart, we do have a gap down here in the 7,600 zone. I fully expect that to fill, most likely after halving. I think that after halving, usually you're going to see some sell pressure, and that's going to probably see that area get filled. And when that does get filled, I think that's going to be a potentially nice spot to get long for your post-halving grind higher. But again, guys, a lot of this has to do with, I know we're in a recession that's going to come to fruition, and a lot of that data is backward looking. So they'll say, yeah, we had a confirmed recession, back in starting in April, for example. But I think more so it's a concern of, do we go into a depression mode? Now, I know the virus broke the camel's back. It was a straw that broke the camel's back, but make no mistake, there were already underlying financial problems in the system. That's why we saw the Feds doing the overnight repo operations with the banks to help with interbank lending, because that was already locking up. And that was all the way back starting from September. So we had issues, and all it took was a little hiccup to magnify that problem. And that's what the coronavirus did. So now coronavirus is really the worst of it all, because to combat that, you're shutting down social distancing, and that really just amplifies the issue. So really bad pickle right now for where our economy is. So there is a huge downside risk here. And that's what I think longer term for Bitcoin, getting through this halving, yes. But then if we can't get the liquidity flowing in the system, then that will be a bigger problem. And that's what's going to separate us from what we saw in 2008, because we didn't shut down our economic engines. The banks had a huge problem, and they kind of just puked up all over everything. So this is different than '08, even though largely what we've seen as far as the initial crash, this elongated bounce up, and then we'll see what we do here, but a potential rollover has been quite the same. But we could take longer than we did in '08, a long L-shaped recovery where it comes down and goes sideways. And if there's a lack of liquidity in the system, Bitcoin's going to take a while. It might outperform better, but it's going to take a while to manifest itself and start getting going until the economy starts to get going. Because again, all of this requires liquidity flowing and properly working capital markets. Unless there's just a complete and utter disconnect and Bitcoin becomes a solo market, a solo bull market, where everyone's just piling into that for a flight to safety, capital safety, which could happen. But being that it's a young asset yet, I'm going to say that doesn't happen this go around. Okay. Block reward halving countdown. We are 7 days out. Now, the halving itself probably going to be uneventful, right? And we may even start moving down through it, and most likely moving down after it. So just bear that in mind. The reward itself, the reward halving, not going to do much for you as an end user, as a hodler, but it will start, I believe, once we get past this economic funk. This is going to be, going forward, extremely exciting cycle. This is the one I think is going to drop a lot of jaws as far as what Bitcoin does on the price action. Again, remember the stock to flow charts that we showed you guys. Once we get to this post-halving peak a year and a half out, I mean, we should be definitely heading toward that six-figure mark in valuation. So make sure you get them while you can. If you own whole Bitcoins, that will be a feat in and of itself, because there just won't be enough to go around. And as Bitcoin gets more mainstream, that will become increasingly difficult because of price. All right, guys, well, that's it for this video. I hope it helps. If you have any questions, leave them below. If you're interested in getting in the room with us, head over to tradelikeagenius.com or tradegenius.co, and we look forward to seeing you in there. Thanks for watching, guys. I'll see you on the next video. Take care. Bye-bye.
Trade Genius.